Hi everybody, Lance Dunn here with Keller Williams Real Estate, and thanks for checking in on our latest video of the process of home buying and working with mortgage lenders. Today I just wanted to talk with Joe Bonaduce from Movement Mortgage about some misconceptions about what you need as far as down payments when you're purchasing a house. A lot of people think that you need 20% down, and that's simply not the case. There's a lot of programs out there that let you get into a home for a lot less than that. So Joe, I'm sure you've seen this question come up a lot. How can I get into a house if I was a buyer if I don't have 20% to put down?
There's a lot of different options available for less than 20% down, and thank you very much for setting this up for us and having me here today. Some of the different options that you're going to be looking at, there's conventional options with low down payments, there's government-backed loans. Today we're going to focus mostly on some of the non-conventional loans. Okay, what we're talking about today are basically going to be FHA and USDA loans. Being you're based out of Clinton in Hunterdon County, New Jersey, a very common loan out in this area is the USDA loan, which requires no down payment whatsoever. It does have to be in an eligible area. Eligible areas are dictated by the USDA, and those do change yearly. It's determined by population density, and it has to be what they consider to be a rural area. So that's one of the restrictions with that loan. However, it does have no down payment. You are allowed a seller's concession. So typically we can get a seller's concession for that buyer to cover, if not all of their closing costs, most of them. And most of my clients can get into a home for this particular program simply paying for an appraisal and their homeowner's insurance. Everything else is pretty much paid for by the seller and the seller's concession, assuming that can be negotiated. If that can't be, they're also allowed gift funds. You can get gifts from family members in order to help out with those closing costs if the seller's concession can't be negotiated. One of the other nice things about the USDA loan is that it does have fairly inexpensive mortgage insurance associated with it. When you look at some of the other low down payment options, the mortgage insurance can be a little bit costly on those, which drives up your monthly payment, and no one wants that. So the USDA has done a nice job with keeping that very low. And they'll also do loans down to a 620 credit score.
Yeah.
You know, so giving you flexibility there. Obviously, if you have somebody with credit issues, we're always happy to help out and get their credit in better shape, but they do go down to a 620.
So just a couple questions, because sometimes people don't understand a lot of the terminology. With USDA, that's the actual United States Department of Agriculture, right?
Yes, it is the same guys that approve your beef and all of that stuff. They do this to basically enhance home ownership in rural areas. They're promoting home ownership in the rural parts of this country, all over the country.
Okay.
For example, in this area though, Warren County, New Jersey, every single town except Phillipsburg is covered. Okay, in Hunterdon County, I believe every single town is covered. You go into Somerset County, there are areas in Somerset County. I believe Bedminster, south of Hillsborough. Hillsborough was covered until recently. Like I said, they do update the maps based on population density every couple of years. So Hillsborough is really not available any longer. But if you ever have questions on it, you just let me know, or you can just log online, go to Google, put in USDA property eligibility, and it will take you right to the link. Some of the other things to know about a USDA loan that are important though, if it does have a septic tank on the property, the septic does have to have a passing inspection.
Right.
Okay. They are very tight when it comes to your debt to income ratio. Debt to income ratio being when we look at what your monthly expenses are versus what your total gross monthly income is. And there are also income limits with USDA loans. Depending on the county that you're in the area, with the USDA loan, a 1 to 3 person household in most areas of New Jersey, the income limit's going to be in the mid-90s. Once you go to a 4 or 5 person household or larger, the income limits jump up to like 120,000 or so.
Right.
So something else that you do need to be aware of. One of the drawbacks of a USDA loan though is you're not allowed any non-occupying co-borrowers. Okay, so you can't have mom or dad co-sign for this if they're not going to be living in the property with you, unlike some other loans. And the mortgage insurance is for the life of the loan on these.
Okay, so you can't get rid of it unless you refinance out of USDA.
Absolutely, absolutely. And we're going to do some comparisons with that with the next program I'd like to talk about, which is FHA. But anything else you want to address on the USDA?
Well, this one,
first?
the question I had is actually going to cover both.
Okay.
Because you mentioned concessions and how that can help people get into a house with the seller assisting you with some of your closing costs. kind of explain about that, because that's a question that people have. They just don't understand it sometimes because it's not a common thing.
Give you a good example. When you're dealing with a seller's concession, essentially what happens is the seller is going to be paying part of or all of your closing costs out of the proceeds of the sale of their home. So for argument's sake, let's say you're purchasing a $200,000 home and the seller owes no money on it. For this argument, let's take realtor commissions out of the transaction. We're going to make this very simple. So if I own a home that I'm selling for $200,000, and again, we're taking out transfer taxes, real estate, transfer fees, all that stuff. Let's ignore that for a minute. I would, in theory, pocket $200,000. But my buyer that's purchasing the home for me needs a $7,000 seller's concession. So my net is now going to go from $200,000 down to $193,000 the day of the sale. I don't, as the buyer, I never actually have the money in my pocket. It's not like a check is given to me. It's just done at the closing table with the attorneys and the title companies.
Okay, that makes sense. So yeah, you were about to expand on a little bit of the FHA.
Okay. So now we'll go back to the FHA. FHA does require a down payment, which is a minimum of 3.5% down. That can be gifted to you from a family member. Typically with the FHA loans, a lot of times we do get gifts from family, and that's not an issue. If you are going to be getting a gift though, for any mortgage transaction, make sure you speak to your loan officer and have it handled the proper way. You never just want, mom or dad or your rich uncle to hand you $5,000 cash. That's not a good idea. It's going to create havoc for your processing. Cash is not your friend when it comes to mortgages. Keep that in mind. FHA though is very flexible in terms of debt to income ratios, which again is when we look at what your gross monthly income is versus your expenses. FHA offers the most flexibility when it comes to that. FHA also goes down to the lowest credit score. We can do FHA loans down to a 580 credit score. However, we typically try to get people up above a 620 because it does give us more flexibility with their approval. Once it gets below a 620, they do tighten up the guidelines some. You are allowed non-occupying co-borrowers with this. So if mom and dad want to co-sign for you with this and they have their own property, they're not moving in, that is not an issue with this. And that's where helping out with the debt to income ratio can definitely come in. The mortgage insurance is more expensive with the FHA when comparing to the USDA. In fact, the monthly mortgage insurance is going to run you more than double what it would with the USDA, and we're going to show you a little chart with all these figures shortly. The mortgage insurance is for the life of the loan on FHA also, unless you put down 10% or more down at the time of purchase, in which case it's mandatory for 11 years. So one of the nice things is there is an option to get out of it if you do have some money to put down. Multifamily homes are okay with the FHA where they are not okay with the USDA. So if you're looking to purchase a two-family house, we can even use rental income to help you qualify sometimes, again helping alleviate some of that debt to income ratio issue. You're allowed up to a 6% seller's concession with the FHA to put towards your closing costs, not down payment, closing costs or your prepaid items such as your escrows for your taxes. And that's pretty much all I got on the FHA. But like I said, it is by far the most flexible loan program out there. You don't have to have great credit. You don't have to have a ton of money down. You can get gifts. You can borrow against your 401k for down payment money. There's a lot of different options, and that's why it's important you speak to a mortgage professional. If you have any desire to stop paying rent, which is essentially paying your landlord's mortgage, and start paying your own and building equity and wealth, then you want to speak to a knowledgeable loan officer that can walk you through all these different options.
Okay. And you had some quick numbers that you wanted to kind of just
actually, if I can hold this up, hopefully this comes out okay on the camera here.
I'm actually going to post this up on the blog so you can see it.
But here's a quick example of it. Estimated $200,000 purchase price for FHA and USDA. And as you can see, even though there is no money down with the USDA, the payment ends up coming out cheaper than the FHA. All rates do vary daily. These are just some estimated rates based on the current market. So, you got to check with your loan officer to make sure what the current rates are on particular programs. But as you can see, even with no money down, the USDA comes out cheaper. And the reason for that is the mortgage insurance costs less than half as much.
There you go. All right, so I appreciate you going over all that stuff. If anybody needs help with any of these types of loan programs, what would be the best way for them to get in touch with you?
Best way to contact me is my cell phone or email. Either one of those works. I get back to people as quickly as possible. And if you do call and I don't answer, please leave a voicemail. It probably means I'm on the other line with the client. Please leave me a voicemail and I'll get back to you as quickly as possible. And keep in mind, these are just some of the options available. Depending on your particular situation, we really look at everybody's needs individually and figure out what is going to work best for them now and in the future, and we really tailor a program to your specific needs.
Well, thank you very much. I will post Joe's email and phone number up in the comments. I appreciate all your time, and if you guys need anything, let me know also. And thanks for checking in. If you like this video, click like or subscribe so that you see some more updates coming down later down the road. All right, thanks. Bye bye.